Today I'll be showing you an extremely easy option strategy that you can do on a stock that doesn't trade very high or low. It just stays pretty stagnant and trades only sideways. So for this example, I'll be showing you on Ford Motor. We're going to come over here and we'll look at the past week just to show you that it doesn't trade all that much. So we see on May 4th right here, 1497 was the highest. May 2nd, 1383 is the lowest. So it trades about $1 at the most. So it trades pretty stagnant. So we're going to come over here to trade Ford options so I can show you this example. And so the first thing that we are going to do is we're going to decide where we think Ford will be trading by this expiration date, May 13th. This is what we chose. This is about a week away from today when I'm filming this. So let's say that we think that Ford is actually just going to be right around this point. So all we're going to do is we're going to buy a put first. So let's say that we think it's going to be right at this share price. Let's just say that that's where we think it's going to be. So we're going to go down 2. So 1 strike price, 2 strike price. We're going to sell the put, or buy the put right here. Then what we're going to do is we're going to sell that same put 1 above. So you can see we bought the put right here at 13.5 and we sold the put right here at 14. And then what we're going to do is you're going to sell a call 1 above all of that. So if we sold the put at 14, that's the one we just did. Now we're going to sell the call at 14.5. So we click this right here. And then the next step is we're going to buy a call. That's the last piece, and we're just going to go up one more time. So then we're going to buy the call right here. So if you look on this side, you can see the prices. So for example, 13.5, 14, 14.5, and 15. So to just run that over again, we bought the put at 13.5, we sold that put at 14, we sold the call at 14.5, we bought the call at 15. So this is called a short iron condor. This is what it should say right here if you do it properly. It should look something like this. It should look like this pyramid right here with a plateau on top of it, and then you should see limited losses on both sides. So you can see your max profit, and then you can see that as long as Ford only trades sideways, because Ford's trading right here right now, so as long as Ford trades sideways, it'll stay just in the zone and our profit will be there. And if it falls out of it, our max loss is cut, so we're not going to lose tremendous amounts of money. If you think $29 isn't enough, you can come over here and we can actually increase that. So come to continue. You see that all this is working off of one contract. So the number of times that you increase the contract is actually a multiplier for your max profit and your max loss. So for example, if we switch this to 2 contracts, now everything doubles. Your max profit doubles and your max loss doubles because it was that times 2. If we switch this to 5, you see everything went times 5. So now your max profit is 145 and your max loss is 105. So you can see over here, for example, might make this at 6 just so that we can break the $170 price point. So you can kind of see right here exactly where Ford has to be for these profits to happen. And so this is, like I said, called a short iron condor. So we're going to come over here to option strat to visualize this a little bit better. So we click on build, come over here to the left side under neutral, and we're going to click on iron condor. Now first things first, we're going to put in the correct ticker symbol for the stock we chose. For this example, we chose Ford, so we're going to put in Ford. And make sure you choose the correct expiration date. Over here, we chose May 13th. So right here, we're going to choose May 13th. So now all we're going to do is we're going to copy all of this information onto option strat. So you see that we did 4 little pieces right here, 1, 2, 3, 4, and there just so happens to be 4 pieces right here, 2 red and 2 green. So first things first, we're going to do the sell first. So the sell is these 2. So we sold a put at $14. So selling is on the bottom and P for put. So 14, we'll move that there. We sold a call at 14.5. Like I said, selling is the ones on the bottom, and a call, C for call, 14.5. So now we'll do the 2 buying. So we bought a put at 13.5. P for put, bring that to 13.5. $15 call is the last one that we bought. So $15 call right here to 15. All right, so now you can see right here, and this is going to say $28 because this assumes that we're just only using one contract. But like I said, if you do multiple contracts, all you do is multiply all of these numbers by the contracts that you chose, and you'll get the correct information. So you can see if you move this chart range around, you can see where the profits are going to be, and this will skew the dollar amounts. You can move around the implied volatility, see how that affects it, but for right now we'll just leave it to what it's at right now. And so yeah, so you come over here to option strat and you can see the exact prices at the exact times of the days of the week, and you can determine where the stock will be trading at what date, what time, and you can by using that you can figure out what profits you'll be making. Obviously, when you get closer to your expiration date, you'll make more money, and then you can obviously make even more money by controlling multiple contracts, and so that's a way that you can multiply it. But yeah, I recommend you always come over here to option strat before you put an option into place, and just copy down whatever trade you make, and then you can visualize it a little bit better to determine if that's the trade that you want to do or not. But yeah, you can play around with it and see the differences and see how things affect it. So you move this over, scoot this over too, and you can see exactly how it plays with it. So yeah, you should always come around to option strat and mess around with your option strategy before you put it into place. If you're curious about other option strategies, check out my channel. I have some more on there, and if you like these type of videos, subscribe for more. And yeah, thank you for watching.